Donald Trump just struck an art of the deal with Vietnam on trade. Now, the question is this deal actually going to lead to a stronger U.S. economy? And what's going to happen to jobs or inflation? Well, we're going to talk about that in this video. But first, some of the concepts or frameworks of the deal. So this is actually more than a China framework. It actually seems to have a functional deal. Vietnam to pay 20% tariff on any goods it sends to the United States. Last year, Vietnam sent about $137 billion to the United States, and that level has been straight up skyrocketing. In fact, Vietnam has the third largest trade surplus of any country with us. In other words, we have a giant trade deficit with them. That's because we only import about $13 billion, we only export about $13 billion to Vietnam. So $13 billion goes from us to Vietnam. We take about $137 billion. So it's about a 10x difference. For every $10 that we import from Vietnam, Vietnam imports about $1. Now Vietnam's like, we promised to import more, including agricultural stuff. Who cares? Why are we seeing surges from Vietnam imports? Well, part of it is frankly because a lot of our companies manufacture over there. Restoration Hardware, Lululemon, Nike, Gap, IKEA, Lego, Intel, Ford, Toyota, Apple, Samsung, Adidas, that's the German way to say, H&M, Under Armour. These are a lot of companies that manufacture and are reliant on Vietnam, at least to some part in their manufacturing process. Now, initially, when we saw this deal announced, that there was a deal with details to follow, stocks like Nike and Restoration Hardware popped on the news. But Donald Trump said details to follow. Then the details came out, and that's when things got a little funny. Now, I'm going to explain why things got a little funny and what this means for jobs and margins and all that in just a moment. But what I do want to mention is this morning, we were talking about, not only in the course live streams, but also very early this morning, we were talking about Hood. When we saw our volume start rising here on Hood, we saw this as a potential breakout, confirming our 90 in the pre-market, and the next natural spot is 100. So we're very, very bullish on Hood right around here. Now, if you want analysis like this every morning, even before the market opens, make sure you're part of the Meet Kevin Alpha Report, which comes out every morning before the market opens, and we put it together and analyze potential trades or historical trends or otherwise. This is a little bit more of a 50-50 trade right now that we're at about 100. But anyway, if you want analysis like what we did on Hood over here, which played out perfectly, especially with this increasing volume, very impressive. I mean, more volume over here than we had during the first 10, 15 minutes, which really helped drove this. Of course, risk factor now that volume is declining. Make sure you join that Meet Kevin Alpha Report. You get all the courses, all the course live streams, the Alpha Report every day the market is open, the new lectures coming out, especially the ones on Trumponomics. So stay tuned for that because that'll be all about the big, beautiful bill. Stay tuned. So that said, we now have to understand what does this mean for margins, because here's the thing. Liberation Day, we went to 46% tariff on Vietnamese products. Then we went to a 10% tariff. So, which is still higher than what it was before. We were closer to a trade-weighted average of maybe 3% tariffs on Vietnam. That went to 10% after Liberation Day's pause. Problem is now it's slightly more than 20% because we're going to have a 40% tariff on transshipping, which is Chinese products going through Vietnam to the United States. Probably one of the reasons we saw Vietnamese trade explode and that trade deficit with Vietnam explode is because of transshipping and just more manufacturing going to Vietnam over China because of the 2018 trade war, making Vietnam a more desirable place to manufacture. That said, you have to remember how this actually functionally works for companies, okay? So understand this for a moment. When Nike sells you a $150 shoe, about, I'm gonna say, COGS, probably 25%. Let's go with 25% on COGS. 37.5 is probably the cost that applies to Vietnam. So tariff at 20% is really on 37.50, not 150. Very important to remember that, right? Now, that works out to about a $7.50 tariff. On the total product, That's not a big deal. That works out to 750 divided by 150, which is 7.5 divided by 1.5, 5%. Oh, I look up and it already did my math for me. Apple AI. That's funny. I was not expecting that. Anyway, 5%. So could Nike shoes go up in price 5%? Probably not. Now, why would they not go up? Because revenues are collapsing about 12 to 26% at Nike. Online, closer to mid-20s collapse. Converse down mid-20s. Total revenues down well over 10%. What is this signal? They don't have pricing power. They have small PP, okay? Nobody wants small PP. And so when you have small PP and you're limited on your pricing power, the last thing you do is raise prices. Instead, you try to innovate your shoe with designs or whatever, or increase advertising, right? And this is exactly what Nike is doing. They're trying to innovate and increase advertising because they can't raise prices. The problem is, if that doesn't work, where does the pain show up? Not in CPI, which is consumer price index inflation. Yes, it shows up in PPI, which is producer price, index inflation. But the Fed doesn't really care about PPI. They care about consumer prices. If consumer prices don't go up, where does the 5% pain go? Jobs. Just like the ADP problem that we had this morning. Again, this is very slow though. Very slow, very lagging, and very damaging when it shows up. Until it shows up, the party can keep going on. So, in the short term, having a trade deal is great. It also sets the stage for other deals. Unfortunately, so I'll just say sadly, it sets the bar high, right? It basically says we want bigly tariffs. Like Donald Trump wants revenue. He's addicted to this tariff revenue. That's bad for jobs long term. So good for markets, short to medium term, which would be like 3-6 months, right? 3-6 mo. Longer term could reduce growth and jobs. That's my take on this Vietnamese trade deal. Again, nice to have, but also somewhat problematic. Hey, look at that. What a surprise. I said higher risk to keep playing this at 100, especially with volume falling, and look at it happen. And it's happening live. It's not like we're doing some replay here. This is the same stuff that I do in the Alpha Report in the morning. In fact, I said the trend on Circle is down. We know this. And if as soon as we lose 183, which is the 182.87 line here, we're going to keep going down. The momentum, just understand, and we've been following this momentum and talking about this in our Alpha Report all year long. The momentum went CoreWeave, and then the momentum slowed on CoreWeave. Where did it go? Circle. Circle goes, from $30 to $300. It was a crazy 10x, okay? And we were talking about it the entire way. Then the momentum is now dying on Circle. Where's it going? Well, it's actually going to FinTech. Who's winning? Robinhood. SoFi. Makes sense. What the next cycle is, we don't know. But for right now, it seems to, it's likely to stick to FinTech until like the next big, IPO or whatever comes around. This is just simple momentum trading. Anyway, that gives us an update on Vietnam.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.